All right, good afternoon, everybody. Doc Severson with you here today. Ready, Set, Trade, 10X Tribe coaching for Tuesday, the 16th of March. Good morning, good afternoon, good evening, everybody, wherever you're coming in from. Let me know where you are actually accessing today's show from. Let me know where you guys are located. It's always interesting to find out where people are calling in from in today's session. All right, let's take a look and see what we have going on here. The market is, I'd say, a little bit nervous going into the Fed meeting tomorrow. USA all the way. All right, so let's take a look here. I'm just going to hide myself down in the lower left-hand corner here. We got who let the bulls out from USA? We got Bulgaria. Hello, everybody. I'm coming to you guys from Greenville, South Carolina. So today's a little bit of a rainy day. I think we're going to have some rain for the rest of this week until maybe Friday, and then just in time for this weekend. And it's time to mow the grass, believe it or not. All right, let's see what we're seeing here. This is the S&P 500. The S&P is just a little bit of profit taking today after reaching all-time new highs. We have plenty of energy for this market to move. Right now, it is just absolutely frightened as to what Jerome Powell is going to say tomorrow. The last time he had the opportunity to put out the fire a couple weeks ago, he kind of ducked the question. So they are teeing up a pretty big Fed meeting for tomorrow. Obviously, we have the 10-year note, which has been going higher lately. Let's take a look at that 10-year note, and today it continues to go higher. So we did have a little bit of a rally going this morning in tech stocks. That seems to have kind of gone out so far just because rates continue just inching and inching higher, seemingly without end at this point. We've seen this going on for 1, 2, 3, 4, 5, 6, 7. This is the 8th straight week. So 2 straight months we've seen rates going higher at this point. And it's giving the market, even though it's only 1.6%, it's not necessarily the absolute rate today. It's the rate of change, which nobody likes. All right, welcome aboard, folks. Let me know where you're coming in from today. And also, if you have any questions that you want to queue up, I've got a little presentation for you guys, which I think might help some of you. All right, let's see what the NASDAQ is doing. NASDAQ is a little stronger today, but man, that 50-day moving average overhead is coming into play. Somebody is taking profits into the 50-day. And unfortunately, that could be a technical sell signal if we get that shooting star candlestick up there and a failure at the 50-day moving average. This is going to lead to a lower high setting up, which is not above the last lower high. So this is just another lower high setting up, and maybe we have one more trip down. Now, eventually, I think that we'll see this thing, even if it does drip down, we'll see this thing heading higher after who knows what, right? Whatever the catalyst is going to be. I don't think interest rates going slightly higher in the meantime is going to necessarily divert all this money that's out there. All right, let's get over to the presentation for today, and then I'll open it up to questions later on. So I've got one that I've done before. Not sure if you guys have seen this, but your 7 steps to better trading results. And this was really a lot of the impetus behind the book that I did a few years ago, which is called Hacking the Holy Grail. So let me get into defining what the problem is that we're trying to solve. If you're a retail trader, we all have some kind of an issue. And the problem is that we're trying to learn how to trade risk differently than we were taught when we were kids. Everything is rooted in that, is that we are taught how to handle risk in the wrong manner for us to be effective traders. So we come really out of the box incorrectly prepared to trade. And so we have to get past that point. We have to relearn this stuff. So the problem is that we're trying to solve our financial performance. There is a progression that's out there, and this is written by this guy by the name of Bo Yoder. And it's kind of cool because it shows where you begin here and then ultimately on this progression up to mastery. you're going to become a beginner on the way up to mastery, right? So how do you know where you are in that continuum? Well, he did a nice job of showing what's called the trader progression. So I'm going to start off with mystification here. You're brand new. You don't know how markets work. You view trading as fun and exciting. A lot of folks that are on Wall Street bets are still in the mystification stage. More than likely, you joined in during the end of a bull market, so you're unconsciously incompetent. Success comes easily and making money seems simple. You're sizing a Lambo for your garage because you went all in on a trade and it's way up right now. The problem is you get crushed when the markets turn. This is mystification. So nobody claims to be in this stage, but a lot of people actually are. The next stage that people transition into, typically after they get crushed once, is called the hot pot stage. You're hooked. You got crushed, right? You got crushed on the pullback, on the turn down, but you're hooked. You start to define your approach and learn how markets move. You start to go through a little bit of education. So you wait for your setup around whatever strategy that you're trading, strategy of the day usually. But like touching a hot pot on the stove, you get burned every time you enter and you start getting timid. So you decide that the problem is the strategy and not you. So you keep trying different strategies with the same result. And this is what I see people doing is they'll invest in one strategy and then that doesn't work out. So they find somebody else that's selling something and they run over here and buy this program and then they see something else and then something else. And then just one thing leads to another. And you never really make any progress because instead of getting maybe a year of experience, you're getting 1 month of experience 12 times and you just never really get anywhere. And this is what I see a lot of folks doing. So if you get past the hot pot stage, you get into what's called the cynical skepticism stage. And this is where I can spot people a mile away because every time you enter a trade, you lose. And, you're convinced that it's somebody else's fault. The Fed, the market makers, the brokers, the gurus, high frequency trading, whatever it is. So some never exit this stage and they quit. And of course, these folks are extremely bitter. This is the cynical skepticism stage. Now, if you're able to get out of this stage, if you stick with it, what you typically will do is you'll say, well, I need more. I need more ways to avoid risk since I'm sick and tired of losing. So I think that more is better. So if you have 8 chart studies on your chart, then you must think that 9 is better. You're always looking to add something and never take something away. This is what scared money looks like. And this is the stage that I find the majority of traders that work with me get stuck in, is that they're always, hey, Doc, can I add this and this and this and this? Or can I take your system and add one more study onto it? That's not going to hurt anything, is it? And it creates this sort of analysis paralysis thing. And it's just, again, reminiscent of scared money, where you're afraid to take a loss. Nobody likes to take a loss, but it's part of trading. Now, if you're able to get past this stage, ultimately the way that you're going to get out of this stage, again, the squiggle trader stage, where I find most people are, is when they get inwardly bound. Traders that survive all of the previous stages have a chance to become consistently profitable if they manage to graduate to inwardly bound. Those in this stage have finally understood that the holy grail of trading is not some study or chart pattern or strategy. It's them. It starts with them and their ability to think differently from the rest of the investing herd. Whether or not you become more contrarian, whether you start to understand that losing is just part of the sample set that you go through and is not a personal affliction. This is the inwardly bound stage. This is where you start to study yourself and your reaction to what's going on as one of the inputs. And then those that go down this road, if you're able to do this in the effective manner, is, got one more thing here, is the mastery stage. So we get into the mastery stage. So to me, if you hit inwardly bound, you're you're there, right? So a lot of people just want to skip stages though. A lot of people just say, well, look, can I just go straight to inwardly bound? And I've never seen anybody skip them. It seems like everybody has to like work this out of their system. They've got to work all this crap that's in their system out, because we all come, right, incorrectly formed to trade. So I've never seen anybody skip a stage, but I've seen some people minimize their time in some of the earlier stages. The sooner that you can get to be inwardly bound and understand that really the key towards your trading is you, the more you're able to, or the quicker you're able to earn your fair share. So let's see how we can do this in the 7 steps. All right, welcome aboard, Willis and GR. So step number 1, we have to think differently about risk. So what's the first thing that comes to your mind when I say risk? It's a negative connotation, isn't it? Risk is bad. Wow, ooh, risk. We don't want risk. And everywhere you see in society, people are talking about risk is a bad thing. This is the way that our parents taught us, is that risk is a bad thing. Johnny, don't go out in the street. You'll get hit by a car. Don't play with that, that friend. He's a bad influence on you. That's risky. Oh, don't play that game. That's risky. You might get hurt. So we grow up in this sort of protective bubble, and we're taught that risk is bad. Now, this is a guy by the name of Alex Honnold. If you guys have ever, I'm trying to think of the name of the movie. I think it's Free Solo. It's the most incredible movie. It's a documentary, and I watched this at a movie theater a couple of years ago, and I was curled up in a ball in the fetal position watching this thing. Like, I knew how it ended, right? I know that he lives. I know he was able to free solo the Yosemite, El Capitan, which means that you're climbing up the side of a 3,000-foot slab of granite with just your hands and your feet. No ropes, no nothing, no anchor points. So how does he feel about risk? And how does he feel about reward? So we have to learn to think differently. We need to think about risk as being our friend and not a foe. Hey, Crypto Cash. It's a tool, not something that we need to manage, not something to avoid. We need to learn that taking trades that feel bad means that we're trading against the crowd, and that's almost always a good thing. So taking trades that feel good is one of the things you're going to do when you're a beginning trader. You're going to wait till everything feels perfect, and you're going to wait till everybody tells you, hey, thumbs up, that looks like an excellent trade, dude. And this almost always means that you're going with the crowd, and you're about to get hammered. You're about to get hammered until you are able to break this. And this is why I think trading with Wall Street Bets and some of the other forums that are out there is so dangerous, because folks are typically getting in at the end of the move because they're waiting for things to feel good. Understand also that there's no reward without risk. A lot of people will come to me and say, hey, Doc, what's the trade with the least amount of risk in it and the most likely probability of success? And my answer to them is always the same thing. It's like, well, there's certificates of deposit. That sounds like the perfect strategy for you. Money market. Yeah, man, 2% for a year, 2% annually. Imagine that. How long would it take you to double your money with that? A long time. Longer than any of us have. A professional looks at risk as a tool and not something to run from. But the problem is we eat like a bird and crap like an elephant. We're trading with scared capital, and so we take small profits off the table when we see them, but we'll ride losing trades down the rabbit hole for many different irrational reasons. So I just know it's going to reverse, or the subreddit said it would bounce. Everybody in Wall Street Bets said it would bounce. Yeah, it's just a paper loss now. It's not an actual loss until I close the trade. We've all heard these same things. A lot of us have said them. This is why we eat like a bird and crap like an elephant when it comes to our trades. We have to reverse that. The problem is that fear rules our decisions. A lot of people say it's fear and greed, and I disagree. I think it's entirely fear. And it depends on what you consider to be fear. If we focus on not losing, what do we get, right? We fear that rallies will leave without us. This is FOMO, fear of missing out. And then sell-offs, by the same token, is called fear of loss. So to me, fear rules every retail investing decision. It's not necessarily greed. Greed will make us complacent and maybe a little bit lazy, and this is where we get caught off guard. But I don't know that many people that are, greed actually rules their, that's more of a Hollywood type thing, really. That's more of where you've got the market cornered and you won't let go. And not many retail traders are going to be able to do that. So it's fear. So we end up trading not to lose instead of trading to win. And I got some news for you. If you trade not to lose, you will lose, because what that does is it sends a signal to your subconscious mind, which says lose. Instead of saying, man, I want to enter this trade to win. What can I do to enter this trade and win? Instead of, well, I want to enter this trade and I hope I don't lose. I'm going to do everything I can not to lose. In the brain, all it hears is lose. And this is why, we've all seen the same thing and watched a football game where somebody gets up a big lead and then they sit back and they play prevent defense. It is the most frustrating thing in the world to watch a sports game. And I guess it was maybe 4 years ago, the Super Bowl? 3 or 4 years ago, the Atlanta Falcons were up something like 31-3 over the Patriots in the first half. And then they sat back and played prevent defense. Hey, let's make sure we got this game in the bag. Let's just not lose it. And because of that attitude, they lost it. And the Patriots were playing to win. Risk is bad. Again, this is what we're taught as children, is that risk is a bad thing. And we have to unlearn this. We have to unlearn the fact that we all think risk is a bad thing. So we see the risk in the trade and we go, oh, that's bad. I don't want that. So we start to work our risk out of it. And for this reason, a lot of people play things like iron condors that are this wide because they don't want the risk. And unfortunately, they don't pay very well. And then when you do lose, you give back everything and more. Eat like a bird, crap like an elephant. Okay, so that's step one. We need to think differently about risk. Step two, and I'll go through these quickly here. What you need to do to begin this process is to specialize and focus. Everybody's out there telling you to diversify. Well, you need a well-diversified portfolio. Bull. You need to focus to begin with. You need to pick one thing. Everybody's out there trying to trade every stock that moves and try to get into everything and diversify. And all that means is you're going to lose in a lot more trades. That makes you a jack of all trades and a master of none. So what's your competition doing? Your competition are professionals. They will typically specialize on one form of trading, one instrument, one time frame, perhaps one time a day. A great example of this, and these guys are going away, but these guys are dinosaurs, but the old S&P 500 trading pits in Chicago, people would stand on their 1 square foot of real estate, stand there all day long, and they would own one instrument, maybe one option strike, maybe one series, and they would sit there and hammer on that one trade all day long. And they would make their fair share because they were experts. They never took their eye off the ball. They're patiently waiting for the herd to overcommit and make a mistake. Now you, on the other hand, you're not focused. You got a dozen things going on. You're probably working a full-time job in some way. You're trying to watch this. You're trying to trade. You're watching. You're going through 3 different programs at once. You're in a damn hurry to be successful. And because of the fact that you're throwing up all this stuff on the air, you're trying to, see what sticks, right? You're throwing everything in the wall that you can. And you're hoping that, just through volume that you end up being successful. and you wonder why your competition is working. Again, you're doing this more for a hobby and not really as a professional. Professionals are going to focus on doing one thing and doing one thing really, really well. So what I want you to find is your one thing. If you don't know what this means, what I would do is search Curly's Law in YouTube and find a scene from the movie called City Slickers. Find your one thing. This is what you'll specialize in. Nobody can find this for you. A lot of people say, well, Doc, what should my one thing be? I don't know. I don't know what makes you tick, right? You've got to find the one thing. Brett Steenbarger says, find your rage to master. You've got to find that one thing that's going to just, you just become obsessed by it. And that's where mastery lives. Focusing on one thing will help you get there faster. Just a quick aside, my own personal development, I was one of those typical guys that was going through a big training program and I was working so hard at it, man. Every spare moment I was studying and doing all kinds of different paper trades and stuff like that. And after a year, I'd gotten pretty good, or at least I knew a lot of things about this, but I wasn't making any money. It was frustrating as hell. And so I literally did a sweep of my desk. I was like, whoosh, swept everything off and said, all right, I'm going back to the drawing board. I'm going to pick one thing. I'm going to pick one strategy, one chart. I'm only going to do one thing on one chart. And so what I did was I just kind of did an inventory of my skills, and I said, like, what chart should that be? What strategy should that be? And what do I find attractive? And that's what I did. And nobody told me to do that. It sort of came to me like, man, I've got to get focused here. And within, I think it was 4 months of making that decision, I handed in my notice at work, and I walked away from a 100K job. And that was fun. That's a fun thing to do. Now, looking back, I probably wouldn't have done it the same way. I don't recommend that everybody do it in the same way that I did it. It was a little bit reckless, but it sure felt good. Find your one thing. All right, that leads us to step 3, and I'll step it up here. Define your edge. Most people trade and think that their edge is just, well, I'm using the stochastics. That's my edge. No. Understand that there's no trophies out there. No trophies are awarded based on how long you've been at this. So you might have 20 years of trading experience, but maybe you're getting 1 year of experience 20 times. You're not getting truly 20 years of compounded interest on your knowledge. Edge is not automatically awarded by length of service. I don't care, or the market doesn't care how long you've been doing this. Maybe you've been doing it wrong the whole time. Don't think of it as personal combat, that if you win, that you're taking money away from somebody else. Think of markets as this sort of massive river of risk running in front of you. You're just going to grab a little cup, pull a little bit out of there, and get paid for that. That's your fair share. Don't think about where it comes from. Well, if I take this away from somebody, I'm a bad person. It's not like that. You're performing a service. You're adding liquidity to the market. Understand what your competitive edge is. So I should be able to get into a 30-second elevator talk with you to say, oh, you're a trader? What's your edge? And you should be able to tell me exactly what your edge is. Two standard edges that we have in the markets are like trend trading, trading with the trend, time decay of options selling, are two standard edges. But the very best edge that's out there is being on the other side of a panicked herd of traders. Learn how to get on the other side of the herd. And I'll tell you guys that chart studies are not enough. A lot of people are like, well, everybody must use the MACD. Everybody knows that the MACD is the most professional study that's out there, and I can't believe you don't use it. It's not like that, right? It's not like that. It doesn't really matter. Chart studies are just a lagging indicator of price behavior. They're just lagging studies. It's all how you use them. I don't care what it is that you use. And what you'll find is that most professionals have very, very low levels of studies on there. Just use very simple, crude systems, really, because they're able to see through all the noise. So the combination of method, mindset, and money management is what is going to give you edge. And think of this as kind of a three-legged step stool, if you will. If you're missing any of these legs, you've got to have mindset, money management, and method. This is an Alexander Elder thing that he coined a long time ago. And it just might give you an edge against the rest of the market if you specialize in it. There's no guarantees out there. And what you'll find is the market edge is constantly moving. What worked last year is not going to work this year because the market changes all the time. And so those that understand how to adapt, adopt, and improvise are the ones that are going to do well. That's your edge. Step 4 is create your plan. Must be spying on me. No, look, I've had thousands of conversations with traders, and it's almost like I'm speaking to everybody the same thing. And not only, I took notes when I went through this as well, too, because I had the very same problems that I'm talking about here. So go ahead. If you fail to plan, then plan to fail, guys. I plan to make money. Well, that's not good enough. Thanks for playing. It's very important that you set up a business plan and not something that you read at one day, then stick up on the shelf and say, thanks, I'm done. And then it just sits up there as shelfware. It gets dusty. This is something where, like, I've been reading or listening to Grant Cardone quite a bit lately with his 10X mindset. And what he does is he writes out his business goals every single day. He rewrites them in front of himself. There's no lack of focus. He knows exactly what it is that he's trying to accomplish and achieve. And you need to have the same level of dedication. You need to understand why you're doing this and send a very important signal to your brain. And then that extensively comes into the trading plan. So you've got to have a trading plan. You've got to have a list of rules, and you just crank through the rules, right? You're just sort of cranking the wheel on this thing. You need to turn yourself into a machine and do that for your one thing that you're trading. Now we're getting to step 5. And this is where, this shouldn't be a big surprise, but it is to a lot of people, because what they do is they say, oh, okay, here's my goals and I've got a set of rules and here's my first trade. Oh crap, it's a loser. All right, well, let's try it again. Here's my second trade. Oh crap, this is a loser. All right, I quit. Let's try some other strategy. And the only way that you're going to do this is if you go through multiple cycles. Do you think Tiger Woods maybe, before he broke his legs, poor guy, but he would work harder than anyone else, and just like, he'd go hit 18 holes of golf, right? He'd play a whole round, and then he'd say, come on, caddy, let's go hit the range. I got to work on my, chipping or some element of his game. And he'd sit there and drill on that until it became muscle memory. Didn't have to think about it. The other analogy that I've used for something like this is that sometimes for people to do hang gliding, what they would do is they get, and this has got to be dangerous, but there's a way to do hang gliding where you tie yourself onto a tow rope and then somebody drives around in great big circles back like this, and you end up going like this on the end of the tow rope, and eventually you detach from the tow rope and off you go. You're hang gliding. Well, think about it that way, is that what you want to do is these circles here through the strategy development, and each one of them you're going to learn something from. So every trade, especially a losing trade, you can learn something from them. All right, so again, Tiger Woods or somebody that's shooting foul shots has done thousands of them. They're looking for their edge. And in trading, this is what I'll do with every strategy is I'm going to track it. I'm going to look to see where I have failed the strategy because I'm human, and I'll try to shortcut it. I'll try to find different ways, or I'll see what I want to see because I have human biases. And that's what happens to us. We all have a bias. And so I'll look for different ways to be able to fix something. And I'll set this up through Pareto analysis, and I'll work on my worst habits on this. What can I eliminate or do differently next time? Don't do this based on a feeling. Keep score. So understand your performance numbers. Commit to improvement. There's a reason why every baseball player knows what their average is against every type of pitch and every location of the strike zone. Oh, here's low and away. I'm going to hold off on that one because my average is only 0.95 when I swing and miss, or if I have a pitch coming in low and away. I may as well take a strike here instead of trying to connect. I'll wait on my pitch. Be a pro. Keep score so you know if and when you're improving. All right, step 6. Build a trader's mindset. Now, a lot of people just write off this mindset thing as like, ooh, be positive. Like, okay, it's not quite, you can't just program yourself. Well, I'm going to think positive as I'm losing money. This is where you get into neuroscience. Do you guys realize that there's a reason why just about every single lottery winner ends up going broke? Because it's the NeuroLinguistic Programming. They've been taught that money, they didn't do anything to win it, and so therefore they think they're not worthy, and so they're going to find ways to give it back. I've worked with traders before that got into a windfall. They accidentally won a huge trade. Or like they forgot about something. They forgot about some call option that they put on. And next thing you know, $100,000 later, and we've seen quite a bit of this with GameStop and AMC and things like that, where they win a big windfall and then they find ways to give it back. This is due to your mindset. So this is called NeuroLinguistic Programming. They've seen tremendous leaps in the last 20 years that I've seen. So if you have results, if you do things that don't make sense to you, like, what did I do that for? Why was I doing that? This is because you're neglecting how your brain works. And you have to study it just as much as you have to study the charts. What you focus on expands. So if you say to yourself, no more losing trades, that's it. Next trade, I'm going to win that next trade. No more losers. That's exactly what you're going to get. You're going to get a loser. If you focus on the negative, you get more negative. If you say to yourself, no more debt, no more debt, no more debt, you're going to have more debt. And you won't be able to explain it. Stop pushing the piece of string across the table and trying to get it to the other side. Learn to pull it. Learn to pull the string so it goes in order. Focus on what you want, not on what you don't want. This is almost like, for those of you that have ridden motorcycles before, there's a concept called target fixation, where you stare at the thing coming at you, and the more you stare at it, the more your bike goes directly into it. This is why people ride right off the end of the road, because they stare at the road and say, man, I hope I don't ride over there. Oh, crap, I'm riding right over there. And they stare at what they don't want. What you focus on expands. So you got to learn to retrain your brain. Your subconscious mind is the core processor of your most basic decisions. It's your inner voice, but you can't just jack something in the back of your head like the Matrix, right? That would be great. But you have to show it the way by doing the work. So this is why I think that there's really no such thing in trading as a quick, easy money type thing where you're going to start off with $500 and you're going to turn it into 500,000. It takes time. You got to do the work. And that leads to the last step here, step 7, is habits. And habits is probably, over the last 3 years, I've seen a lot of stuff around habits. And I was lucky enough to have a lunch with this guy here, James Clear, a couple of years ago, before he hit it big. That guy is huge right now. He's been on CBS TV. He's got a best-selling New York Times. Look at the New York Times bestseller list. He's going to be right on top of it. Great guy. And what he has shown all of us is that little tiny habits are what really counts in life. Success is not a step function. A step function is where you're terrible, you're terrible, you're terrible, and all of a sudden you wake up one day and you're like, you're amazing. It doesn't work like that. It doesn't work like that. It's compounded. It's the aggregation of marginal gains, is what he says. So you don't rise to the level of your goals. So a lot of people say, oh, here's my goals. You don't rise to them. Just because you have high goals doesn't mean that you're going to get there. You fall to the level of your system. So if the goal is important, you're going to put a system behind it. Goals are for those that want to win once. Systems are for those that want to win repeatedly. Remember that one. And then Scott Adams, who is the artist who does the Dilbert cartoon, also is quite an author in his own right. Goals are for losers, systems are for winners. So think about those for a minute. Decide the type of person or role that you want to be. Prove it to yourself with small wins. So look at somebody and say, you know what? I want to be like that person. I want to think like that person. How does that person think? What do they do every day? I want to start acting like that person. So decide the type of person. So if you want to be a profitable trader, what would that profitable trader do on a daily basis? How would they conduct themselves? The same way that you are? Probably not. So if you want to be a profitable trader, what would they do? How would they act? What habits would they display? And prove it to yourself with small wins. This is the aggregation of marginal gains. It comes from the aggregation, these small little adjustments. So every day, remember, if you get better at 1% every day, so if I challenge somebody like, do you think you could get better at something at your trade, at this one strategy, your one thing, could you get better at this by 1% tomorrow? And everybody's like, no problem, I can do that. I can get better at 1% at something by tomorrow. All right, we'll do it. And then the day after that, do it again. And then do it again, and then do it again. By the end of the year, you'll be 37 times better at that function. So think about it this way. If you pick one thing, one strategy, one chart, your one thing, and then start off by getting 1% better at that every single day. At the end of the year, how can you not be a master at that? Do you have the patience to do that? Do you have the courage to be able to think differently from the herd? Do you have the guts to be able to go against the crowd? We're social creatures. It's really tough to do. Everybody is walking one way, and you're going to feel compelled to walk along with it. Don't leave me behind. Nope, you've got to learn to go the opposite way. That's where the edge is. That's where the gold mine is, guys. All right, that is, I believe that's what I had for you guys here today. That's your 7 steps to better trading results. If you go through all of that and understand it, and if you want to, you can take this video and replay it again so you see what I'm talking about, and maybe you'll pick up something the next time you go through it. I would do that if you can, because this to me is where, this is why I sat there and wrote a book about it, because when I saw what happened to me based on all these things that I've did, and I've done the same thing with a lot of students saying, this is what you got to do. And I've had those tough discussions, those, tough love discussions with people, like, hey doc, I'm like way under on this trade. What the hell should I do? Like, okay, let's stop. Everybody really is the same thing. Everybody goes through the same thing on this. And so to me, there's only one very narrow path that you have to follow to be successful in this business. Will you do it? Okay. So I, at this point, will be happy to take your questions. If you guys want to look at any charts or anything, ask any questions about strategies or who my favorite baseball team is or whatever you guys want to talk about. It's up to you. Now I'm going to take a break for a second here. Let me know what your questions are. Open session now. All right, well, you guys are, while I'm waiting for your questions to come in, I'm just going to kind of walk through the charts here and see what I see. NASDAQ is up today. I'm not real happy with the candle. I'm going to look at the S&Ps. The S&Ps, here's the opening range. It's well below the opening range. But they're coming back. They're coming back. The price is back in the opening range after undergoing a little bit. Tomorrow should be interesting because there's the market holds its breath tomorrow. All that volatility stays bottled up for hours until the Fed meeting finally is over. So we can see this here. The NASDAQ is still up almost 1%. Let's see. Dr. Ram, what do I do in the days when there's no zero DTE? Well, first of all, understand that there's a lot of different strategies, right? So I approach things in a pyramid format. Like this. So this represents the amount of capital per trade that's out there. And I'll do, these relatively simple, low risk, non-directional index trades. I'll just say non-directional IX. And then maybe with a little bit less capital, what I'll do is I'll do non-directional stocks. So this is where I'm selling puts, selling cash secured puts. These are trades that sit on there for 6 weeks and they just sort of, they don't do much of anything. They just, the time value decay just occurs more and more and more and more. And then near expiration, we've been doing these in ReadySetTrade for ReadySetTrade's now been live for just a little over a year. We lit it up back in February. I have only been assigned on one of these trades over the last year. Now, this Friday, I might get assigned on a couple more, which is fine. That's the whole point. You want to be assigned on these eventually because the stock carries value on something that you want to own. But this represents a big chunk of my capital, and it's just sitting in the background, burning away, not doing much of anything. We're selling time value. That's the whole point behind this. Now, I'll do like directional plays. These are maybe swing trades, things like that. And then, up here is where I do, the very smallest trades. These are like the zero DTEs up here. I just don't use that much capital for those. So if there's Tuesdays and Thursdays where we don't have anything going on. Now, Dr. Ram, in the course that I think that you signed up for, there is what's called a 1 DTE, but I don't do them that often. So it's a 1 day to expiration, which you can do on Tuesdays and Thursdays. It's just that, man, they're slow. They're really slow. So you just don't get that final day time decay. It's like this. If let's do this. Here's T+1. And there's T0. Here's the last day. And what you'll see is that time decay goes something like this. There's a little bit there, but then this final day, it really is dramatic. And once you get good at these, you just won't want to do these anymore. So that's kind of a long-winded answer to your question, but there's plenty of things to do. But start out with one thing, first of all. But these ones are super simple to trade. Requires very little technique or knowledge to get going with these. Oh, let's see. David S. Do you recommend Excel to track wins and losses, or is there something online tool that can help? All right, so I'll show you some of the tools that I use. So our email system is Google, right? So with Google, you get Google Docs, and then here's an example of like some of the tracking that I'm doing on the iron flies that I do for zero DTE. So I'm just tracking stuff like that. So Google Docs works out really well. Here's another tracking spreadsheet that we're using for a new strategy that we're bringing up, which is the 45 days to expiration iron condors, and just the different types of management that we're using for these. So yeah, Excel, or I don't get religious. I don't care whether it's Excel or numbers or Google, what is this? Google what? Google Sheets. That's it. So it doesn't matter because they all run the same thing. Just get something, and I like to recommend that people build their own stuff. And it's not like I'm some magic engineer with spreadsheets. There's a lot of my customers that are way better than I am at this stuff. And I'm just good enough to know how to organize it and get some cells to work together. That's it. I don't have any pivot tables and macros going on and stuff like that. Just track it, man. Learn from it. That's the whole point. And it sends a signal to your brain that if you're able to put down the detail and keep track of what you're doing, you're sending a signal to your brain that you care about this and that you're doing this consciously and that you're serious about this. So you're not just throwing out trades just to throw them out there. Oh, let's see. What are the books? I've got a couple of books out there. Let's see. What are they? If we just go out to, if you go out to Amazon, there's a couple of them out there. So Hacking the Holy Grail is kind of the book that is about today's topic. The Trader's Guide to Cracking the Code of Profitability. The other book that I have is called Fractal Energy Trading. And this is the book that I came out with last year. Here it is. So this is last year's book. This is so Hacking the Holy Grail is more about mindset and constructing the right framework and attitude about your trading and about kind of the mental side of things. Fractal Energy Trading is about how to build a simple 4-rule system that's centered around price action and around multiple time frames or fractals. Okay. All right, let's see. Next question. Okay, so this is a fascinating question. So Tigeril, I want to learn how to trade different option strategies. If you had to pick one, then which one would you start with? Verticals? Okay, so first of all, what you've got to do is, I can't tell you which one to start with. I can tell you which ones that I started with. I started with doing covered calls because covered calls was really easy for me to understand. Because I started off, I gave all my money to Morgan Stanley and they did a terrible job with it. So I pulled it all back into an IRA account a long time ago. And I said, okay, I've got all this stock that's out there. Now I'm going to start doing covered calls against it. And it really taught me kind of how to manage these things. If I were to start with one thing, I would probably say cash secured puts. Now, some people call them naked puts. I don't like to use that term because it implies that you don't have the margin to trade those. But it's probably my favorite strategy in a primary bull market. It's my favorite strategy. It's very simple to operate. It's very successful for us. It can be dangerous in the wrong hands. You'll hear horror stories about how people get clobbered. But that's usually because they're chasing after the market. If they're not disciplined, they don't know how to manage it. You can get into spreads. Spreads get to be a little bit more complicated because all of a sudden you have to think about defense and defending them and risk management and how to set up the spread and implied volatility. And iron condors are even more complicated. So I wouldn't start with something like that. I would probably start up with a simple option. Now, not everybody can trade cash secured puts. A lot of people these days can't trade them in their IRA. The answer to that is fire your broker. Get with a broker that will give you the permission to do what it is that you need to do. But I would say to finish off the answer to that question, it's what lights you up that counts. It's what lights you up that counts. You've got to find a strategy that you're willing to work on and go through. You guys all know about this thing. This is called the dip. The dip is out there. All right. So what you guys want is out there, right? You want this thing that's up at the top of the mountain. You can see it beaming in the distance. You're like, man, I want that. And you're over here, right? You're over here and you're saying, man, I want that. And you just want to fly over there and grab it. And it doesn't work that way. This is why we buy all these get-rich-quick programs. You want to just fly right over the swamp that's in the middle here. But the only way that this is going to work is you've got to go through the dip. You start off with these massive expectations, and maybe you even get a little bit of good results. But sooner or later, what you're going to run into is your first challenge. This is where most people quit. This is where they quit. And they turn around and they go back to here because this is their comfort zone. But when the going gets tough, this is where you have to keep on going and learn how to march up this hill, just like Sisyphus pushing that ball up the hill until you get what you want to do. This is called the dip. You got to get past the dip. You can look at any human endeavor. They will be exactly the same. I don't care whether it's hitting a baseball, hitting a golf ball, hitting a tennis ball, putting a basketball into a hoop, or trading. It's all going to be the same thing. So study human performance and how the brain handles human performance. And don't go for the shortcut. The shortcuts do not work in this business, nor do they work in any other business. Your goal should be to take the long cut. I know that sounds counterintuitive, but this is what you're going to find about human performance is that everything that works is counterintuitive. Go for the long cut. Be patient. This does take some time. You can get to be functionally profitable in a relatively short period of time if you're able to go into, remember the inwardly bound phase that I talked about. You can maybe get there within a year. You'll have to go through the phases. There's no other way to go around this. You'll have to go through the phases to get there. But you can minimize your time in this if you take some of the advice that I dispense with today. All right, folks, I think we are done. So thanks for hanging out with me today. Don't forget, if you're just, if you've just stumbled into us through YouTube, go ahead and join our free community, which is out at elite.readyset.trade. So let me show that to you really quick here. Show you how to get there. So if you just go out to our platform, this is the elite.readyset.trade is out there. So I'm just going to copy this URL and put it into the room. Join our free community. It doesn't cost anything. We will not spam you. And there's several people on here today, and some of which are actually on our Elite service, which is the subscription service where I talk to them every day. So go ahead and check out what we have and participate. Be part of the community. Ask questions. Bring things to people. This is why we're here, because it's so much easier to do this with a crowd. All right, last question here. Franco is asking, what do I think about S-Works? Kind of tied to the hip with Apple, isn't it? So let's look at S-Works here. We got 5 minutes left in the trading day. Okay, S-Works. Let's see. It's come out of a really strong base. So you can see these types of bases that are out there. Actually, this is a great big ascending triangle, and it's still working to the upside. Now, short term, it's still making higher highs and higher lows. It's still primary trend to the upside. It's undergone a swing test, pretty deep dip down to 160. It looks pretty good. A lot of energy here across the board. It still looks fine. Still looks fine. $180 stock, though, tough to trade unless you're using something like spreads. The book that there's lots of books on biases. The one that I have read, which goes into a lot of them, is by the author called Curtis Faith. Curtis Faith, and I'll just Faith, and he's one of the original turtle traders. Curtis Faith, I forget the name of the book, but it's one of the ones that he goes into all the basic cognitive biases, but just about any book on psychology will also do that. Okay, Franco, one more, and then we'll call it a day here. All right, HOLX. All right, same comments. There's a lot of energy here. Now, the only concern that I have with this one is that this has started the transition process into perhaps a downtrend. Now, this might be just a weekly pullback, but this one has got a clear 75 to escape this being a lower high. So there's two places that this one can go from here. One is to pull everybody in and think that this is a bounce, and then this becomes a lower high, and then we just continue the downside. So rule number 2 is that reversals start from the inside out. We've already reversed into a downtrend on the daily chart. Watch out for the next lower high. Now, this could be just the bounce off the weekly chart, or this could be a lower high. So very important decision point here coming up pretty soon with HOLX. Are we doing any Bitcoin-related trades? Yeah, over at ReadySetCrypto.com. I don't do any Bitcoin-related trades in ReadySetTrade. ReadySetTrade is for the equity markets only. You really can't cross the streams here. They're just so different. The markets are so different. The trading instruments are so different. If we jam these things together, we'd never get anywhere. All right. Hey, everybody. Thanks so much for listening and checking in today. I invite you to join me again next Tuesday or join our elite service, and we're going to do a session this Thursday night as well, too. Thanks, everybody. You guys take care, and we will catch you later on. Thanks very much.